Thank you so much. It's great to see everybody here, and thank you guys for joining me. I want to kick things off here. I don't know about you guys, but I spend like 90% of my time on the phone with clients now talking about whether November trends were better than October trends, and with case counts going up or down, which company is going to miss earnings. I don't want to do that, right? Because I'm tired of it. I'm sure you guys are tired of that too. What I do want to do, though, is talk about how you think about some of the bigger themes that are going to shape how the market thinks about travel here in a post-pandemic environment. So let me turn things over to my friend and best-selling author of Nothing But Net, Mr. Mahaney.
Thank you. That was the question? Okay. So maybe what you were asking is there a permanent change in travel?
Yeah, what are the big
post-COVID?
themes? What are the big themes you think shape 22 and 23?
Well, I think it's the kind of the open-ended question of whether there is a major change in how people travel. Will long stay, 28 days longer stays that are now material percentage, 20% of Airbnb's business and probably a good chunk of Expedia and Priceline bookings businesses, is that a permanent change in how people are we going to really be doing remote work, remote living, or is that something that'll fade over the next couple of years? And then we haven't even opened up one of the biggest elements of travel. So the question is, how quickly is that going to come back, which is cross-border travel. Of all the different segments that are out there, that's still down 50% year over year. Since pre-COVID levels. So I think one of the big themes or one of the big trends we're waiting for, and it starts off, I think, in the middle of this month. I don't know if anybody here has traveled in from overseas, but a few people, good. Nice to see that. I think you're the first. Welcome. But the question is, how many more people will do that, and how quickly will it ramp? And hopefully it'll ramp quickly. So I think about those two things. Is there a permanent change in how people are going to travel in the future, and particularly in terms of a preference for long stay vacations? And how quickly will it take the last segment of global travel to really recover, and that's cross-border travel?
Yeah. Jed?
Yeah, the way, just to piggyback off Mark's comments, on longer term stays, I think about flexibility, right? So you used to have to fly on a Friday, come back on a Sunday. Now you can fly maybe on a Wednesday when it's a little cheaper, come back on a Monday. I actually think that could be a positive trend where people have just more flexibility to work from anywhere. They're not traveling longer term, but it's making it more easier to travel. I think just on cross-border, I think it's just a matter of border restrictions. I think as soon as governments loosen up the restrictions, the data's there, people are going to travel. And then the other thing I think you got to watch for next year is, I think it was 2019, Mark was talking about the Google squeeze. Is that going to start to come back into investors' mind next year? Or, has Airbnb and Verbal's done a nice job of that? Have they been able to now drive a lot of direct traffic to their sites?
Yeah. Thoughts?
So as far as cross-border goes, think about it this way. Pre-pandemic, roughly 2.5 million people a day traveled in the United States, and it was kind of in a range of 1.6 million on a Tuesday in January to 3.2 million on a Friday in July. Of that, about 1 million was domestic leisure, about 750,000 was business, and 750,000 were international. Yeah. Now, we're regularly seeing about 2 million people a day travel, and we think that most of that is domestic, some form of domestic leisure and business. So we think business comes back about 80% of the way, at least in 2022, maybe 2023 gets a little better. Conferences aren't going away. Especially if you're younger, you need to build a network, and the only way you can do it is in-person meetings. It's really hard to build a network of contacts if you do it remotely. So I think some form of conference travel comes back. The 1-hour meeting that I used to do, I call it travel like it's 2019, where Monday morning I'm in Columbus, Monday at lunch I'm in Cincinnati, or what's after Columbus? I guess I start in Cleveland, Columbus, Cincinnati, and Chicago at night. So that kind of travel is going away. But then international cross-border opened November 8th. That was this last Monday. And we're already seeing that demand pick up. I mean, a few of you here raised your hands that you're traveling. I think summer 2022 is going to be pretty amazing internationally. We traveled this summer. We were in Ecuador. It was getting back into, we didn't have to test to go. We just had to be vaccinated or test, one or the other. And getting back to the US was fine. We were able to use the Abbott lab test and from our hotel room. So I think, to Jed's point, as long as it's easy to get in and out, travel's coming back, and it's going to be strong. And our concern is more, will the airlines be able to handle it, given the meltdowns we saw this summer by the airlines. So we're pretty excited.
So I'll give you a really unpopular view if anyone asked. You know, I think in 2019, pre-pandemic, we were talking about the maturation of the space. We saw growth rates slow down to single digits. And yeah, we're going to have a recovery. We're going to get back to 100% or 100% plus at some point. But I think from there forward, we'll now be talking about a much more mature industry that's growing more like the travel industry, as opposed to, 2 to 3 to 4 times the pace of it. So I'm a little worried that the narrative next year might begin to shift back towards the relative maturation of online travel. Any perspective on that, guys?
I would say a couple things. One, do you think the leisure TAM market has actually expanded now because of this flexibility, right? I think these work from anywhere trends, you're no longer in a box. The other thing, that could be good is actually some of these supply chain concerns, right? There's no supply, you have pilots and everything, but, you don't have to worry about a supply chain to get an Airbnb in Aspen, right? You just got to worry about supply. So I think you could be seeing consumers, instead of buying things, buying more experiences. So I think that could be a benefit. The other tailwind you're going to have too is urban, right? Urban should start to come back too in 22, which is, if you still look at other pockets in the US, it's still down a decent amount.
Yeah.
And the other thing too is, during the pandemic, we couldn't do experiences. And that's a big millennial thing, especially. Until recently, we have 5 kids between us and nobody owned anything. Now, 4 of the 5 of them own their own homes. And during the pandemic, we saw everybody get a Peloton or some form of stationary bike. We saw some treadmills come in the house. So it looks like the kids all bought stuff, and we bought stuff. We bought a golf simulator, we bought a stationary bike. And now we're back to traveling. And I don't think I'm atypical, and I think people will, to your point, do experiences again. At least for a couple of years, just because people are tired of being in what I was calling paradise prison. We all love being at home, but we're kind of tired of it.
But again, I guess we can't do any of that stuff if we can't get pilots. So where do we stand on things like that?
Yeah, pilots are an issue. So here are the numbers. The industry had 55,000 pilots pre-pandemic. Mandatory retirement age for pilots is 65, so that's not a surprise. You know the exact day you're turning 65. And most pilots retire around 62 or 3. And last year, all the airlines asked their pilots, because nobody foresaw that the government was going to give people lots and lots of money. And we could talk about that, but to keep it to pilots, they accelerated retirement. And as a result, American Delta United specifically need to hire 27,000 pilots this decade alone. And if you add them, plus some other random pilot retirements at a younger airline like Southwest, plus growth at airlines like Sun Country, Allegiant, Spirit, and American Delta United and everybody else, we need 35,000 to 40,000 pilots.
That's a big number.
It is a huge number. And all the airlines are encouraging diversity. They're encouraging the whole aviation training centers, and they're accelerating that growth. The area, that's one area. Then the other area where we need people is mechanics, licensed aviation mechanics. We do not have enough of those. That is another these are great careers, and we need people. I said this, flight attendant is a good career, but you have to deal with unruly passengers. I thought maybe if this airline, analyst gig doesn't work out, I could try out as a flight attendant, but probably wouldn't get hired anyway. Delta had 35,000 applications for 1,500 spots. So we need people in the industry, and they're good paying. Those jobs are really good paying jobs, but unfortunately, the meltdowns that you saw this summer were in the customer service agent area, the folks that provide services like wheelchair runners, baggage handlers, things like that. We don't have enough of those, and wages are going up, so there's definitely a lot of wage inflation.
Yeah, I'm glad we don't have to deal as much with that on our side, that's for sure. But one thing we do have to deal with, Mark, is there's been a massive uptick in regulatory scrutiny of some of the big tech platforms. I want to focus maybe a bit on Google, right? One of the things they've done over time is obviously promote their own content over organic content, and that's been a big drag in the travel space and lots of other places. Do you think that's ever going to change? Will the government make that change? Is that 1 year out, 5 years out, or never?
I think there's a distinct possibility that, I don't know if it's a probability, but the chances are greater than we've ever seen that during this administration you'll get some sort of non-discriminatory act come out of Congress, Klobuchar and Grassley. So this is a bipartisan issue. There's about one thing that there's only one bipartisan issue in this country, unfortunately, and that seems to be bashing big tech. And anyway, this legislation that would leave it to the FTC to figure out how to implement, but that would deny large tech platforms the ability to self-preference their own services, like Google may have done with travel, Amazon may do in its marketplace. It looks like that's probably got enough momentum to go into effect. I mean, it's a 30 to 40% chance. So it's not a probability, it's not over 50% chance, but there's a decent chance that could actually have a material impact on companies like TripAdvisor and on the OTA. So that's the one piece of legislation. I don't think Google's going to be broken up. I don't think Amazon will, nor do I think they should be. But I think that non-discriminatory stopping of self-preferencing, I think that has a very distinct chance of passing.
Yeah. So one of the neat little charts we often throw up here at the conference over the years is market cap chart, right? And usually it's got booking on one side with a really big number, and it's got all the hotel chains on the other side that collectively are smaller than booking. Since we actually last convened here in person, Airbnb's come public, and we could probably throw up that same nice chart. It's over 130 billion of market cap. Jed, what do you think about that? Overpriced, overhyped, or does it make sense?
So we have a perform. It is on valuation. I would say this. I think if you're an Airbnb bull, what you like, it goes back to Mark's point, right? And my point I made earlier. There's more flexibility, traveling longer, living anywhere. That we've seen this massive TAM expansion, right? I think Phocuswright, it's like, leisure accommodations is like 700 billion. I think if you look at Airbnb's TAM, it's well over $1 trillion, right? So if you look and you take a step back, it's like, well, they're only 6% of global accommodations, and they've done a good job scaling all this unique inventory, and they're seen as the most disruptive player in the space, and that when they hit like over 100 billion of bookings, they're still growing 20% versus Booking.com, which their growth decelerated to high single digits. Yes. That's the big case. It's going to be hard to know if we're going to see that in the next 2 to 3 years. I will say this. Airbnb's got a pretty good narrative into the next 6 months, right? Everything. We have cross-border opening up, urban, and vacation rentals are still going to be strong. I mean, I was talking to somebody yesterday at this conference. I mean, I think Florida RevPAR for vacation rentals is up 20-30% for the winter for the winter booking season.
Yeah, that's big. So I wanted to touch on a couple of other things here. Model evolutions. Right, so Booking many times over the years would get up and talk about how they do very well because they're solely focused on accommodation. But now a big part of their playbook is this connected trip, which means essentially they're going to have to build out an air business. What do you make of that, Mark? Is that a sign that business has matured, or is that just a big opportunity?
Your interpretation is the first, that it's matured, that's why they're doing this?
Indeed.
I think that's a reasonable interpretation. We've, the people here who've come to this conference for the last 22 years, we've seen this Priceline, then Booking become this monstrous company selling one product. Okay, they sold a few other things. They had rental cars and cruises, but really it was hotel rooms almost exclusively, versus Expedia, which sold multiple products. So we sold what was called the connected trip packages packages didn't seem to work. At least they worked fine, but they didn't set up the monster company, which was booking. So that for booking now to kind of pivot back just makes you wonder a little. I sort of this is, it's not jumping the shark, but it's now you're looking for it's an incremental driver. Maybe I'm wrong, and there's nothing wrong with trying it. My guess is that they've had enormous success building up where they are. And now they're looking for incremental growth opportunities, and that's how I interpret it. But by the way, on Jed's point about Airbnb, that's one of the reasons I really like Airbnb, which is that this is a company that potentially can dramatically expand its TAM, or its total addressable market. The wonder of Booking and Expedia over the last decade or two was that there were so many hotels in the world, and these companies only accounted for a small single-digit percentage share, but the ability of the hotel inventory to expand it happens, but it's slow. The ability for alternative accommodations to expand, I mean, that thing, if you innovate well on host solutions, which Airbnb does, I mean, that thing can increase by multiples. That's what's so interesting. Now, I don't know whether it will or not, but the potential for the supply for alternative accommodations to increase by multiples is there. You don't have that in another industry. That's what makes Airbnb so interesting.
And Jed, it looked like you had something to say there.
I was just thinking, do you think Airbnb can get to those projections without conventional inventory, the marks?
Well, so then then it gets back to this first question about what was the big learning from COVID? And there clearly was a shift towards alternative accommodations during COVID. Now, whether we shift back a little bit to traditional accommodations, but I think we had millennials very strongly adopted alternative accommodations, and I don't think that changes as they get kids and families and obligations and things like that. And so my guess is that we've had a permanent step up in demand that will continue to rise for alternative accommodations. So I think that'll solve that.
So a bit of a different angle. We're talking about booking, getting into air. Airbnb was trying to build an air product too. What do you think about? Do the airlines need a bunch of OTAs selling tickets? Do they need that help? Can they do it themselves? Are they set up to bring in business directly?
So two things. One, they'd prefer business direct. Right? They'd prefer you to come right to their website, and their customer service tends to be a little better direct. But that said, if you're talking the corporate side, it's better to have, I guess it's better to be able to aggregate bookings so that you make sure you get the discounts that you, as a user, you would earn or you've negotiated. So to get those rates, you need to have them done in one area. Now, you can do it with technology. Everybody can do it direct from your and have that captured with your corporate travel service. But I think in general, the airlines would, from a cost perspective, they want you to book direct. They would prefer not to deal with the OTAs. I mean, they have to, but they don't want to.
Now, shifting gears a little bit, subscriptions. It's been a big topic, across a lot of our coverage universe, Mark, but also in travel. So we've seen Inspirato on the hospitality side. We've seen TripAdvisor, big player, big scaled player in travel. And we've even seen some airlines toying with subscription products. Does that model work in travel in your perspective?
Boy, that's a great question. Subscriptions, I think, work well for high frequency services and products, things that you do regularly, like watching video, shopping. Is travel enough? Is there enough frequency around travel that subscriptions would work? And I'm sure for some people it will, but to whether it's a mass market, I guess I'm skeptical. But I'd love to be proved wrong. But the base question to me is it a high frequency activity? High frequency activities lend themselves to subscriptions. Leisure travel is done how many times a year by the average family? 2 to 3 times a year? Yeah. I'm not sure that that's enough frequency for subscription business to really get mass market. It can be some large niche markets, but not mass market. Yeah. Am I right?
Thoughts on the hospitality side?
I think Mark's right. If you look at Inspirato, right, they're targeting affluent travelers, right? It's sort of like the NetJets model. So, if the product is good for an affluent traveler making a couple $1,000,000 a year, paying Inspirato $30,000 annually, yes, but if there's a problem with that product, it's going to go off the rails relatively quickly. So it's more of a product, and you're dealing with you're dealing with people that have a pretty high bar for what they want with travel if you're paying that kind of money.
And Helane, we were talking earlier, and you mentioned there was actually a bit of history in the airline business with subscriptions, of which I was totally unaware.
Yeah, and unless you're of a certain generation, you probably don't remember. The old People Express was acquired by Frontier Airlines #1, and then that was acquired by Continental. But a group of pilots started an airline called Kiwi, and Kiwi sold a subscription book, 10 tickets for, I don't remember the price, I think it was $1,000. And all you had to do was call the day before and you could take your trip. And it didn't work. If you didn't use up your tickets when Kiwi went bankrupt, you were an unsecured creditor. One of the former iterations of Eastern Airlines tried it, and it didn't work. And to Mark's point, one of the reasons is the percent number of leisure trips people take. If you're going to use that model, you really have to do high frequency. If you're commuting, until recently, I was coming back and forth to Florida almost every 2 or 3 weeks, and it would have helped me, right? Instead of having to think which weekend I was going to go and whether I was going to redeem miles if the airfare was too high, or just pay for the ticket if the airfare was reasonable. So I think that would work. But I mean, in general, when you're dealing with 90% load factors, I don't necessarily think it'll work. But you've got Wheels Up, you have NetJets, which Jed mentioned. There are lots of other products, Blade. All the eVTOL companies, which we're not talking about, but Joby, Archer, some of those are designed when they start to be ground replacement companies, but eventually the distances will be longer, and maybe then you go subscription. But
that'll be intriguing. So we're running low on time, but I want to make sure because we're all capital markets folks, I want to make sure we touch a bit on SPACs. There was a great panel up yesterday, and they talked about some of the advantages of the SPAC model, and they talked about things like speed to market. They talked about having better control over the narrative because you could pitch your valuation and pitch your forecast. And they also talked about it opening the market to smaller companies. But I think there's some other sides of this as well, some cons. How do you guys think about the SPAC model? Jed, any thoughts?
So I think it's been I would call the last 18, 19 months, it's learn as you go.
Because I know you've been busy with this stuff.
Yes, we had disruptive companies like DraftKings that were first to go SPAC. I think what we've seen now is you really, from an analyst point of view, you have to do a lot of diligence around the models. It's not like an IPO where everything's spoon-fed. And you do have a lot of SPACs with hockey stick growth, which investors are going to question. And then there's the other thing too. It's a lot of it's stuff that's out of my expertise, though. It's like, when are the PIPE shares registered? Is this thing not going to be? Because if it's not at $10, it's generally not going to work because you're just going to redeem the shares. So I think what you're seeing now is more of the sponsors are taking their time to get their PIPE shares lined up as they're going to de-SPAC, right?
Yeah, and I'll give you my 2 cents. I've seen a lot of these companies have struggled to find institutional support. Number one, small market caps. Number two, they don't get good buy-in from us. They don't get a lot of coverage from us, so they don't have a lot of support, which doesn't help them on the visibility side. And then number three, which you referenced, aggressive forecasts, which just scares the heck out of people.
What you need, and I'll make a point, which other industry is what DraftKings did for Vivid Seats. They stabilized that SPAC. SPAC went to $12, and now it's been fine.
Yeah. Mark, have you seen a lot of the SPAC activity?
I've seen some. I think my simple point is I think more companies in the public markets, the better. I think we've gone through a couple of decades of declining number of public equities, and I think it's better to have more opportunities for companies to get into the public markets. Good for those companies in a discipline that I think largely the public markets offer, not always, but oftentimes offer. And then the opportunity for wealth creation by management teams, employees, shareholders, et cetera, whether that's a traditional IPO or direct listing or a SPAC, I'm a little bit neutral on. I think value creation can occur under any of those. I just welcome more companies into the public markets.
And I think a lot of this we've seen on the technology side. Are you seeing a lot of this activity as well?
The SPACs?
Yeah.
Well, Cowen is one of the largest in the place, and it's not necessarily an airline. So I happen to be working on an IPO of an airline right now. and was working on one a couple of months ago. We put it on, the management put it on hold, but straight up IPOs in both cases.
Yeah, but I guess the verdict seems to be here we're relatively neutral. Maybe there's some drawbacks you got to be aware
But
of.
the good thing is, I know we're out of time, to Mark's point, next year at this conference, you could have 10 publicly traded companies,
Yeah,
which would be, you used to have 3 or 4, right? So that's like,
That's a good thing.
that's a great thing.
yeah, hopefully, and hopefully they find their footing and find that institutional audience and maybe get some coverage from us. So we'll see.
Well, and I want to say the leisure, the individual investor audience too.
Yeah.
So you bring more people into the market, to Mark's point, and you have more companies. So it's all good.
I see we are out of time. Thank you guys so much for joining me.
Jay.
It was great to see you again.
Thank you.
Thank you.
What if we told you that we can 3 times your conversion, drive repeat purchases, and supercharge your margins by selling travel fintech products that customers love? Unlock a new revenue stream with travel fintech from Hopper Cloud. Hopper's suite of fintech solutions address every pain point in the customer journey, including price freeze, which allows travelers to lock in a low price, flight disruption guarantee, which offers immediate rebooking, and cancel for any reason, that allows travelers to instantly cancel or change their booking. Travel fintech will turn your shoppers into buyers, increase your average order value, expand your reach, and delight your customers. You'll take on 0 financial risk. Hopper takes on all the risk, utilizing its AI, and it's easy to integrate with API or full white label offerings. If you're ready to supercharge your margins with travel fintech, get started at cloud.hopper.com.